After 3 consecutive weeks of declines, confidence in the U.S. financial market has almost hit rock bottom. Investors are worried about escalating tariffs, high interest rates, and signs of a mild recession. 10 a.m., April 10th, 2025. President Trump suddenly announced a temporary suspension of tariffs on many countries, except China. Trump once said, "We will temporarily suspend tariffs on partner countries for 90 days to ensure global stability." In just a few hours, the U.S. market has recovered the strongest since the 2020 pandemic. Technology stocks led the increase. Investors believe that a softer tax policy will help the technology industry maintain its growth momentum. The market recovered, but a big question is raised. Did anyone know this information in advance? White House press conference, reporters raised their hands to ask questions. Trump stood at the podium and said, "I love America, and I also believe that our allies need time to adjust before we impose new tariffs." The new policy allows 24 countries to postpone tariffs for 90 days, but keeps the same for China, the country considered the main geopolitical challenge. The administration said the move helps partner countries adjust supply chains, avoiding disruptions to global trade. Some sources said the decision was tactical to create leverage before renegotiating trade with China. International markets recovered after the announcement. Nikkei plus 7.9%, KOSPI plus 4.9%. Investors are hoping for a temporary easing of global trade tensions, creating opportunities for reinvestment. Immediately after the announcement, Beijing imposed new retaliatory tariffs on U.S. agricultural products and restricted trade with 18 U.S. companies. Within 10 minutes of the announcement, the stock market showed signs of precognition. The buying was concentrated in technology stocks, which are sensitive to trade and tax policies. Several hedge funds with ties to Trump campaign advisors were said to have made large trades just before the market surged. Quoting Bloomberg, trading volume spiked unusually at the last minute, right after the president suggested on social media that the market is going to explode. No official conclusion has been reached, but the coincidence of timing between the policy announcement, personal tweet, and trading activity has raised a wave of suspicion. Smart trading? Insider trading? Reporters gathered outside, cameras trained on the senators speaking. Immediately after the unusual surge, Democrats began to speak out. Senator Elizabeth Warren, "No one, not even the president, has the right to use their position to manipulate the market for their own benefit or that of their friends." 23 senators co-signed a request to investigate whether insider trading was used to trade stocks. Republicans said it was a political stunt in the middle of the election season, with no clear evidence of wrongdoing. While the liberal media highlighted the manipulation, the conservative press called it a vile political stunt. Was this a media sensation, or the first chapter of a 21st century financial investigation? Within 10 minutes of the announcement, the stock market showed signs of precognition. The buying was concentrated in technology stocks, which are sensitive to trade and tax policies. Several hedge funds with ties to Trump campaign advisors were said to have made large trades just before the market surged. Quoting Bloomberg, trading volume spiked unusually at the last minute, right after the president suggested on social media that the market is going to explode. No official conclusion has been reached, but the coincidence of timing between the policy announcement, personal tweet, and trading activity has raised a wave of suspicion. Smart trading? Insider trading? Insider trading is the use of non-public information to manipulate the market, a serious violation of federal securities laws. If there is evidence that someone in the government knew about the decision before it was made public and bought the stock, this is a classic case for the SEC to open an investigation. The law does not prohibit the president from directing the economy, but it does prohibit any use of classified information to manipulate the market. If Trump or anyone in the government is involved in these transactions, the impact will be more than just legal. It will be a major rift in the U.S. market. Even if there is no illegal behavior, the market will suffer a loss of confidence if the ambiguity continues. Market analysts at CNBC Bloomberg discuss, the sharp move in tech stocks is not unusual from a technical perspective. However, the psychological factor and the simultaneous occurrence of tweets, trades, and announcements makes everything more sensitive than ever. Are financial markets still a fair playing field? Or have they become political weapons in the hands of doomsayers? In an age where a tweet can make or break billions, is trust something that can be bought back with rising stocks? Follow along to make sure you don't miss the biggest developments that affect your wallet and your future. The Financial and Political Newsletter, updated with the pulse of Wall Street.